offices and what you need to know. Before I begin, I just want to point out that at the end of this presentation, there will be a Q&A. If you do have any questions, please put them in the questions section or in the chat section. I will try and answer all of your questions. If there's not enough time, then I will be more than happy to answer them per email. So please do feel free to enlist your questions or even comments in these sections. And throughout the presentation, if you do have any questions, please keep putting them into the chat or the questions section, and I will be happy to answer them. Before we begin, for those of you that are new to our webinar, I would like to give you a brief introduction to who Klako Group is. Klako Group is an international management consulting firm. Our headquarters are based in Hong Kong, and we have offices throughout China as well as Singapore. We have 120 consultants, accountants, and legal professionals on staff who provide a multitude of services, all in the direction of inward investment into China. We provide services that range from market entry consulting to company establishment, followed by corporate compliance work that's required for entities in China, Hong Kong, and Singapore. We do all types of accounting outsource work, as well as trade solutions that are tailor-made for companies. A brief description of who I am. My name is Christina Kohler. I am a director of Klako Group, which is my own family business. I began working for the company in 2003 when I opened our Shanghai office. Since then, I've grown the China offices to having Shanghai as our headquarters, followed by Shenzhen, Guangzhou in the south, Dalian, Tianjin, Beijing in the north, and Chengdu in the west. We also have a few offices in Tier 2 cities. My background is in legal aspects in relation to the Chinese system. I've assisted numerous companies from all around the world to establish their entities overseas. I am also co-author with my father, Klaus Kohler, for the monthly magazine ChinaInvest.biz, which is distributed throughout China and Hong Kong. So today I will be talking about representative offices. Now, I would like to start off the presentation by giving people who do not have a clear concept of what they can do in China a complete background into the Chinese system. In terms of corporate structuring, you can establish a variety of entities in China. Now, I've highlighted here in this presentation where the representative office actually fits in. A representative office is not a legal entity. It is an establishment made by the parent company, and it must be established by a company. It cannot be established by an individual, and it is tied to its parent company by the activities it does, as well as on a financial scale. There is no investment capital whatsoever. It is purely a liaison office. And as you can see, compared to the other variety of entities, the other entities are all limited liability companies, which means there is investment capital that is actually being remitted into those entities in China. So a representative office is just a liaison office. It's not a legally registered entity with capital. The parent company requirements have become more severe in terms of registration offices for the following reason. Representative offices are actually very easy entities to establish, As a consequence, over the last 10 years, many companies from the Middle East, from Africa, from the poorer regions of the world have been establishing these types of entities in order to gain visas into the China region. Because of this, and because of the fake activities that these individuals are doing in China, the main activity is drug importation, the government has become more and more strict and stringent over the years in terms of what representative offices can do, how they can be established, and how they should be maintained. As a consequence, since January 2010, the newest regulation is that the overseas parent company has to be at least 2 years old before a representative office can be established in China. Now, at the time when this regulation came out, many companies were buying shelf companies from countries like Hong Kong, like Singapore, like any of the offshore jurisdictions, British Virgin Islands, Seychelles, etc. I can tell you as of today, there are almost no 2-year-old shelf companies in existence. Some service providers have bought companies over the years and have kept them in place so that they can become 2 years old. But in general, there is a very low quantity of companies that actually do exist. The reason behind this is that the Chinese government wants to make sure that there is substance and quality behind the overseas parent company. And that is something that has to be taken into consideration. You cannot just have a startup and you use a representative office to do that in China. It's not possible. One thing to consider is that when you do handle the establishment of the representative office, as well as any of the future renewal processes, the company kit, so that is the business license as well as further documents of the parent company, have to be notarized by the Chinese embassy. So it is extremely strict in terms of procedures as well. And this is something that needs to be taken into consideration as a cost within your budgeting for the representative office. Now, the business scope of a representative office is something that is a very gray area. There are no black and white regulations in terms of what a representative office can actually do. The simplest interpretation is that a representative office can only do liaison work. Now, I will give you my definition, and with my experience with my existing representative offices, and from what I have seen on the market that has occurred to representative offices, I will give you my definition. A representative office can find suppliers. It can find customers in China. It can employ people to do those functions and those activities. By finding, I'm referring to researching. It can research the market for suppliers and for customers. It can act as a showroom, meaning that products can be kept in the office, and if there are customers that come, they can see the displays of the products. But what it cannot do is it cannot negotiate with any suppliers or customers on the ground in China. What does this mean? None of the employees of a representative should be handling any type of negotiations with suppliers or customers. Now, I have to be honest, it's very difficult for the government to prove whether the employees are actually doing any type of negotiation. But if they see any type of paperwork in reference to emails, in reference to documentation of transactions, then it could suppose that this RO is actually an operational entity and should be a limited liability company. So this is something that has to be taken into consideration. And I'm not saying that my definition is the perfect one, but it is one that will protect you should anything occur. It covers all areas that should be taken into consideration. If you are a service company and you are providing services on the market in China, you should not be a representative office either. You should be a limited liability company. The capital requirements of a representative office are zero. There is no investment capital per se that has to be injected into the entity. The representative office is established and is funded by the parent company directly, and it is only used to pay for expenses, which means that it should not pay for samples, it should not pay for goods, it should not receive funds from any other company outside of the parent company, and it is very much restricted in this way. How rep offices are actually caught out is through the end-of-year audits, whereby the auditor will review the bank transactions occurring within the representative office, and questions may arise if you are working with a good auditor in terms of what is being paid for. A representative office, in terms of corporate structuring, it's very simple. You only have to appoint a chief representative. The chief representative does not have to live in China, but it is recommended that he does for convenience and efficiency purposes. The chief representative is equivalent to the concept of a director of a company, which means that he or she has full liability of what occurs in the representative office. What that also means in worst case scenarios is that if any under-table dealings are occurring in the representative office, the chief representative will be the first person contacted by the authorities, and he will be the first person inflicted with any type of penalties, jail time in worst case scenarios, before it goes to court. The chief representative is automatically liable to pay personal income tax in China, regardless if he is a resident or not. As a consequence, it is quite important to choose this person properly, to think through it before just randomly picking someone, to make sure that it is the right person that fits into the role. The employment of staff is actually quite straightforward. All foreign nationals can be employed directly by the representative office, but they do have to be registered locally, and they do need to have a work permit and residence visa. A new regulation is that there is a statutory limitation on the number of foreign nationals that can be employed by the representative office. The limitation is to 4. This includes the chief representative, if the chief representative is a foreigner. And you are not allowed, the government will not issue more than 4 work permits or 4 residence visas. So that does need to be taken into consideration. The residence visas and work permits are usually valid for 1 year only, and then have to be renewed, usually at the same time as the renewal of the representative office. Mainland Chinese employees have to be employed through a third-party employment agency. Now, I have had many clients who have negative impressions regarding employment agencies, thinking that they are not allowed to choose who their staff are. This is not true. You are permitted to recruit and to employ whomever you like. You just have to use what they call an employment agency, but actually it's a payroll firm to handle the payroll and social insurance issues of your mainland Chinese staff. Now, when you are considering employment of staff in China, you have to consider the base salary as well as social insurance aspects. All Chinese employees must pay social insurance in China. As of October 2011, in theory, all foreign nationals should be paying social insurance in China as well. Now, to give you an updated status, Beijing, Guangzhou, Shenzhen, which are the main Tier 1 cities, all require foreigners to pay social insurance. In Shanghai, it is still voluntary, which basically means foreign nationals are not required to pay social insurance. There are rumors that this will change, but the rumors have been going on for more than a year and there have been no changes currently. So if you are hiring foreign nationals, be wary of where you are based and make sure that they are employed properly and check whether social insurance is applicable for them or not. Now, what many people forget in the initial stages when speaking to me about establishing a representative office in China is that they forget to ask questions relating to the maintenance. And here I would like to advise on what is required, what thoughts you should be thinking about when establishing a rep office and once it is established. Now, I'll go through the first one, which is the basic one, accounting functions. A representative office, although it is only an expense center, has to still file financial management statements, which means it needs to have a profit and loss statement, a balance sheet, and more importantly, the expense list. The rep office, although not making any profit, is still required to declare enterprise income tax and business tax. I will show you the formulas in terms of how it is calculated, but the theory behind it is that a representative office has its office because it is making profit somewhere. What this means is that there is a calculation for the deemed profit being made, and there is a tax rate based on this deemed profit. To give you an overall concept, you would be paying on a quarterly basis approximately 10 to 15% tax on your expenses. In addition to that, as I mentioned previously, if you are doing activities that are outside of the required business scope of your representative office, i.e. you are negotiating with suppliers or with customers, and the government makes a check internally within your office, they may require that on all transactions that the rep office is dealing with, that value-added tax may be required to be paid. This is very important to consider, especially if you are caught, because it means that if you are earning all your profit outside of China, then having a rep office was actually useless because you'll have to pay double tax, whether it's in your home country as well as then in China. So be careful. This is where the business scope becomes important. Be careful that you are not working outside of the business scope requirements. And again, my definition is not always considered the right one, but please do take it into consideration. We just have a question from one of the attendees. In relation to the value-added tax, how will the government actually evaluate or what will they do in the process of investigating the value-added tax? Well, actually, what will happen is that the Tax Bureau will enter your office. They may request to see request to see all documentation that is filed there. They may actually confiscate your computers in order to see all the information that is on there, all the email correspondences, etc. And this is worst case scenario. They will then evaluate all transactions that are occurring. They may require to see all transactions that have occurred directly with the parent company, and they will then evaluate what type of value-added tax should be applicable on the purchases or on the sales of the goods. This also applies to services that are occurring. So again, be wary. Companies, the government is coming for investigations. Just hold on one moment as I'm turning the page. There is then business tax and surtaxes, which are applicable as well. These are all integrated into the enterprise income tax calculation, and it is all based on expenses. On the next slide, I will be showing you the formulas. Surtax is a tax that was implemented in December 2010, and it is a payable on the business tax and VAT payables. The rates vary depending on which region you are based in, but it does increase your tax liabilities. And then naturally there's individual income tax, which needs to be paid for all employees. If you're interested in knowing the scales and how the calculations are made for individual income tax, please do let me know, and I can answer you at a later date. So here are the formulas. On a first glance, it may seem a little bit confusing, but let me walk you through it. The first calculation is the income amount. So this is the deemed profit that I was explaining previously. They will look at the operational expenses and then make the calculation based on that. There is then business tax payable and enterprise income tax payable. On these payables, there is then the education surtax and the urban maintenance and construction surtax as well as then the canal surtax. So as you can see, it's not just a simple process of thinking that it's 10, 12, I mean, the range actually comes to between 10-15% on expenses, but there are actual formulas which need to be taken into consideration and utilized to calculate your tax amounts on a quarterly period. In terms of annual maintenance obligations, this is again something people forget, and they have to realize that there are deadlines provided by the government. The first is a representative office must do end-of-year audit reports. Although it's not a profitable company, you still have to do audit reports, and you will be audited based on your expenses. The audit reports are due by April 31st of each year. Annual individual income tax. If you have an employee that is earning more than 10,000 RMB a month, whether it's a foreigner or a local Chinese, you must do an annual individual income tax. Now, this annual individual income tax is actually applicable to the individual himself. It is not a requirement by the company to do it, but generally all companies, all foreign invested companies, do it for their employees. You have annual profits tax filings as well. So as I mentioned, all taxes are paid quarterly. The fiscal year in China is the calendar year, which means that you have to do the first filing in April for the period of January to March, and so on. At the end of the year, you have to file your annual profits tax filings as well as your annual expense accounts, which will be seen through the annual audit reports. And you might get a credit, or you might have to pay a little bit extra of tax. And again, this is due by April 31st of each year. These dates are generalizations. Some cities may require these submissions to be done earlier or later. So it's very important to develop a relationship with the tax officer to know exactly when all the deadlines are each year, because it does change. Representative offices are required to do on an annual basis a rep office inspection. This is mandatory. The purpose of this RO inspection is so that the government can receive an update about the current situation of the rep office. What are the expenses? How many employees are there? What type of activities is it performing? Part of this RO inspection is that the parent company documents must also be submitted, and they must be notarized by the parent company's jurisdiction and by that Chinese embassy. If you are set up in Hong Kong, it has to be done by a Chinese notary, a designated notary, as well as in Singapore. So you do need to have to add this cost in terms of annual maintenance that you have to get these notarizations done. It's not only cost, but it's also time. In some locations, for example, in Germany, it takes almost 1 month to obtain these documents. In Hong Kong, it can take up to 7 working days. Representative offices used to be required to renew all of their licenses either on an annual basis or every 3 years. Now, in some cities, you can apply for unlimited registration certificates, which means you don't actually have to do a representative office renewal. But you still have to, every rep office has to do an RO inspection, but you may not be required to do a renewal. So again, when your certificates are firstly issued, make sure you check, is there an unlimited term, or do I have a limited term and I have to renew at some point? Make sure you have that checked, and make sure you also check whether other certificates have to be renewed, not just the registration certificate. In Guangdong province, the enterprise code certificate has to actually be renewed every year. So again, be wary of where you are based, what the local regulations are, because it's not unified throughout China. Now, I love this slide for the main reason that I get to tell my clients, as well as the attendees of my webinars and seminars, that I actually do not recommend representative offices. Since the new regulations came out in January 2010, my impression is that the government is trying to have companies close down their representative office and show their commitment to the China market and establish limited companies. For this reason, and the fact that when you calculate the taxes that have to be paid, as well as the annual maintenance requirements that have to be taken care of, you are almost apples to apples doing the same thing that any limited liability company has to do. The disadvantage is that you're just a liaison office. Actually, you cannot do very much. You cannot even handle negotiations. As a result, if you are serious to enter the China market, then make that commitment and set up a limited liability company. We can structure it for you so that it actually handles like a representative office, meaning that you are doing liaison work and you might be doing some negotiations as well, but all transactions are handled offshore from China. How this occurs is that you have registered capital, which a limited liability company must inject. This capital is used to pay all initial startup costs and expenses, just like a representative office. But the advantage is there's no tax implication. So whereas a representative office has to pay tax from day one of paying expenses, a limited liability company doesn't. It has this capital and it uses it for its expenses. My recommendation is to calculate 1 year's worth of expenses and to see how much that is equivalent to and inject that, so that for year 1 you pay no tax at all. Step 2 is that once this capital is used up, you issue a service invoice for either quality control inspection services, commission invoices for sales that have occurred, management fees for the traveling of overseas senior management to China. And on this invoice, there is a business tax of 5% plus the surtaxes, which makes it approximately 5.9% of the invoice amount. But the invoice amount should be equivalent to your monthly operational expenses. As you can see here, you'll only be paying 5.9, let's say 6% tax, versus a representative office that's paying between 10 to 15% on its expenses. So let me just rephrase that, because some people sometimes misunderstand. A rep office pays 10 to 15% on its expenses tax. By handling it like this, in this direction where you have a limited liability company, you could actually be lowering your tax implications, your tax liabilities by half to 6% based on your operational cost. And for some people who have larger offices, maybe 20-person rep offices, this could be something of value to them. And it should be something taken into consideration. My rule of thumb is that for the first 4 years of having a representative office, you declare no profit. So actually, all your invoices are equivalent to your operational expense. On your 5th or 6th year, you should start to make a margin so that you declare some form of profits tax. And this is purely to avoid any suspicions with the tax bureaus and just to make sure that they're happy that some form of tax is being paid in terms of profit tax. So again, I want companies to realize that a rep office is not as advantageous as it used to be. There are much more simple and easier business models that can be created to actually make your structure more efficient, both operationally and tax-wise. So please do keep this in mind. Now, what many service providers forget to mention to companies is what are the legal liabilities that a representative office could face. Well, here's just a few points that you should be taking into consideration. If you establish a rep office and you're conducting you're conducting business activities without registration, or you're conducting business activities that are profit making, you could have up to 500,000 RMB in penalty. That's a considerable amount of penalty for just not thinking that maybe a limited liability company might be more suitable. If you provide false materials, which has been occurring over the years, you can have up to 200,000 in penalties. If you're conducting business beyond your scope, you might have 100,000 in penalties. This is all in RMB. If you fail to register any type of change in a representative office, and what that implies is a change of chief representative, a change of registered office address, then all of this requires to be updated in the government systems. And if you don't do it, there could be a 30,000 renminbi penalty. So you need to take all of these items into consideration. Make sure that your company, your representative office, is in compliance. And if it is not, if you're feeling that after this webinar you might be straying a little bit outside of the scope that you're required to be in, then please do contact us. I'm more than happy to advise you whether you should be staying as a representative office or whether it makes sense to set up a limited liability company. It doesn't take too much to know whether you need to change your structure or not. But be wary of these liabilities. You are now seeing what the penalties can be if you're outside of your scope of business. So keep this in mind. What are our recommendations for ease of operation? Well, I've listed here a few things for companies to take into consideration. If you have a chief representative that is not a resident in China, then there are a few pointers here that you may want to take into your thoughts. Have control and communicate. I have seen too many representative offices left alone and not supervised properly by the senior management of the parent company. As a consequence, work was actually not done that should have been done. Staff were not supervised as they should have been, coming to work late, not doing their job, maybe not even coming in at all in some cases, but still getting their regular salaries every month. You need to create a system, an operational system, whereby you are in touch with your representative office on a daily basis with all the staff members. You need to receive reports, whether it's supplier reports, sales reports, expense sheets. Create a proper operational system so you know what is going on in your representative office. Communicate with your staff. Have control and know what is going on. Don't turn a blind eye and give 100% trust and loyalty to your local staff. Don't be blind to this. You're making an investment, even though it's just a representative office. You're still spending money, rent on an office, salaries for staff, travel expenses to suppliers and customers, perhaps even marketing material in Chinese. You're creating a lot of information that needs to be utilized to enter the China market. Don't ignore it. Make sure you pay attention to what you're doing and why you've set up the rep office, and make sure that the goals are being achieved. Ethical situations. Don't have it in your mind that just because it's China, you can handle under-table business. You don't. If you don't want to do any type of kickback to a supplier or any type of under-table dealings, you don't have to. Don't assume that you are required to do that to make your business in China successful. Don't resort to that if you're being pressured by your staff to do it. Make sure you still have some ethical rights and issues to consider when you're handling your China business. If you are a UK company or a US company, be very much aware of the bribery acts that have come out recently. And make sure that you are following this to the T, because you could eventually have your parent company in a very tight situation. My recommendation is to have experienced foreign staff who, if they can, speak fluent Mandarin. I always say that these staff should be your spy and should know what's going on in the China market. They should have the same philosophy and the same mission as the parent company. And they should be supervising what's going on the local market. Now, you may all think that this would be very expensive. I can tell you now that there is a pool of foreign labor in China just looking to get experience and to stay in China for a longer period of time. And they are willing to accept local packages, not expatriate packages. So don't automatically assume that it's expensive. Outsourcing the administration functions. There are many service providers out there that offer a variety of solutions. For example, Klako, we provide accounting and tax solutions and outsourcing solutions. By outsourcing some of the administrative functions, it allows you to have an outsider view into your company and give you advice on whether things are running smoothly or there are things that you need to take into consideration. Having all your eggs in one basket, meaning having all your staff in one basket in one office, you might not get all the information that you want. So by outsourcing some functions, it might give you a perspective of whether things are not going well versus they're going extremely smoothly. So you may want to consider this. Many clients of mine have proactively asked whether they can establish a parent company, a holding entity as the parent company of the rep office. By all means you can, but just so you know, and as I mentioned at the beginning of the webinar, representative Hong Kong companies that are 2 years old, Singapore companies that are 2 years old, or offshore companies that are 2 years old, there are very few on the market. You know, you do need to take that into consideration, and if you have no choice, then you may have to utilize your parent company to invest. And last but not least, make a strategic plan. Make a business plan. See whether a limited company is more viable for your long-term goal to be achieved in China versus a representative office. One thing I want to mention here is you cannot convert a representative office to a limited company. They are separate establishments, separate application procedures, so it's not an easy task. It's very bureaucratic, but for your long-term strategic goal, it may be the better option. So do take it into consideration. So now is Q&A time. If you have any questions, please do let me know. I'm here to answer anything you may have. Otherwise, I would be more than happy to answer any questions you might have at a later date. You can also send me emails directly. So please do let me know. For the moment, there are no questions that I'm receiving, so I guess I will just go on. Finally, I just want to give you our contact details for both our Hong Kong office and our Shanghai office. As I mentioned from the beginning, with these new regulations that have come up regarding representative offices, it is important for existing rep offices to really review whether it's still a viable option for them, or whether they should start considering setting up a limited company. For those of you that are new to the Chinese market, you may want to evaluate whether a representative office makes sense or not. You should also evaluate what you're actually looking to do on the market. If it's just research, then you may just want to do research activities, and then it would be for a short time frame. But if you are planning to have a long-term commitment into the market, then I do recommend you to take the route of setting up a limited liability company. That is the end of today's presentation. I will be holding 2 additional webinars this month on the 14th and on the 21st of November in relation to representative offices. If you have any questions, please let me know if you would like to attend again, or if you would like to have any of your colleagues attend. In December, our webinar will be related to the annual requirements and end-of-year requirements for Hong Kong and China companies. The registration will be up at the end of this month, so please don't miss it. And I hope you enjoyed today's webinar, and I wish you a very pleasant remainder of the day. Thank you for joining us, and I hope to see you all again soon. Goodbye.